So thanks, Julia. Thanks for having me. That was a really great presentation. I'm Charlene Cranny, and I'm the Campaigns and Communications Director at UKSIF, which is the UK Sustainable Investment and Finance Association, for anyone that doesn't know. And I'm also the Director of Good Money Week. I've been asked to cover the Global Race to Zero and Good Money Week today. So I'll kick off with Good Money Week. And I'll share our campaign aims for this year and share some of the interesting findings from our research so far. So Good Money Week exists to help people find sustainable and ethical options for banking, pensions, savings and investments. And this year it's supported by Aberdeen Standard Investments, Lion Trust, Aviva and Stewart Investors. So thank you so much for your support. We honestly can't do it without you. So each year there's a different theme or focus, and this year the focus will be showing consumers and investors how they can use their money to support a green and fair UK recovery from the pandemic. We really want to create some optimism and empower people to take part in, take ownership of, and financially benefit from hopes to build back better. It's something that we see as having the potential to become a positive, shared and inclusive effort born out of difficult times and concerns about the future. So what can you expect on the 24th, Saturday, when the campaign kicks off? Well, first of all, we'll have a beginner's guide to green, clean and kind money. So that will include top tips such as raising sustainable investments with advisors, investing 50 quid in a positive impact platform, asking for a net zero pension over at Make My Money Matter, those sorts of easy, accessible steps to greener, fairer money. We'll also include some high-level info from research carried out for us by Irish Foundation, which assessed banks, pensions and funds on criteria specific to things needed for a UK green and fair recovery, such as having a net zero commitment, TCFD reporting, responses to the Black Lives Matter campaign, gender pay gap and alignment with the SDGs. We're not going to be rating anyone, but we'll be highlighting leadership on all of those criteria. And I think Julia really helped a lot with this research, so thanks to you as well. We'll also run some free online events and we'll attempt to dominate the media as we try to see conversations about the impact of our money become the norm. Last year, we had something like 280 high quality pieces of media coverage. So we're sort of aiming for something similar again this year. Finally, we'll publish some research into public and investor attitudes to ESG, ethics and money and how that has changed due to the pandemic. I'm afraid you'll have to wait for the YouGov polling of nearly 2,000 members of the public, but what might be even more interesting is some of the research we commissioned to analyse online investor conversations over a 20-month period. We commissioned FinText to conduct the research, and they focused on investor communities on the Reddit platform. And this has a global investor community of over 1 million members as of July this year, and 17,000 investors in the UK specific community. Over 100 conversations are started a day on average. And what is really interesting is that the daily rate of new investor conversations seem to correlate with the S&P 500 volatility index. So when markets are jumpy, investors rush to discuss, and you'll see the graph visualizing that in the report when it's published on Saturday. But what we wanted to discover is whether private investors are speaking the same language as us in sustainable finance, and to find out what they are saying. And unfortunately, it was pretty disappointing. Over 20 months, only a total of 74 conversations featuring a term like ESG, SRI, or ethical investing were started, with a total of just over 2,000 individual responses. So while ESG and sustainable finance is really mainstreaming at the institutional level, helped by policy and regulator appreciation of financially material ESG risk, it hasn't quite trickled down to the retail market as we'd hope. But what else did we find? So ESG is the most popular term, then it's ethical, then it's SRI. ESG and ethical are used together 46% of the time, which indicates a potential conflation of the two strategies. And the majority of conversations featured some objections that a lot of us will be familiar with. So the first one is underperformance. The classic old misconception, you have to trade returns when considering social and environmental impact. This was raised in 43% of the conversations. Some acknowledged outperformance during lockdown, but seemed to see it as an anomaly due to a very unique situation, when in fact it only reproved Morgan Stanley's analysis of 11,000 mutual funds over a 14-year period between 2004 and 2018. What they found is that sustainable funds perform just as well as non-sustainable funds, or better during times of volatility. And that's what we saw again. Each unique situation is rooted in ESG. So the second objection was qualifying criteria. So that's the idea that what's important, an important ESG issue to you might not be an important ESG issue to me. So are we really getting what we want? And this was raised around 34% of the time. The third was a lack of impact. So this is the complaint that equity ESG investing has no real world impact, since trading in the secondary market doesn't really influence companies' behavior. So while this might feel like bad news, actually it's important to know what groups of investors are thinking and where they really need help to understand all the different options, strategies, and benefits available to them. So many of you in this audience really have an opportunity to seize this market. You're perfectly placed to start or continue showing leadership on this and getting ahead of inevitable policy-driven transitions to sustainable net zero economies. We have the EU Action Plan on Sustainable Finance, and we expect the UK to meet or exceed those ambitions. Most of us know that considering ESG risk, especially climate, is financial, but as one values-led private investor put it, investing according to your morals is also a financially good strategy, because if everyone ultimately adopts your morals, as policymakers are in a big way, then you'll get ahead of the game on those investments. So there you have that. And if you want some tips on how to appeal to and attract sustainable investors, we have reviewed 10 academic choice experiments which tested different communication strategies on over 200,000 individuals. And we've come up with 7 simple ways to improve those communications. So these will all be available in the report, which again will launch on Saturday. So moving on to the Race to Zero. This is a global campaign mobilizing a coalition of leading net zero initiatives to rally net zero commitments from businesses, cities, and investors. The initiatives represent over 2,000 commitments made so far, and we expect to see this number soar due to collective action between governments, NGOs, business groups, and others in the lead up to the COP26 Global Climate Summit. Mark Carney launched the COP26 Private Finance Agenda in February, the objective of which is for every professional financial decision to take climate change into account. And net zero commitments are absolutely the ultimate expression of that. So in addition to that, COP26 finance coalitions have been set up in nearly every country across the globe. UKSIF is a member of the UK coalition, and our collective role is to inspire as many in the finance industry to commit to net zero as we can ahead of COP26. To support firms to make these commitments, net zero investment frameworks and principles are being created by initiatives such as the Institutional Investors Group on Climate Change, IIGCC, the Science Based Targets Initiative, and there are some others in the works as well. Also, commitments will be supported by and promoted by the COP presidency, and the various NGOs and business groups working on the private finance agenda are there to support too. So as the race to zero ramps up and more commitments are made, net zero will become the minimum standard for pension savers, investors, and others concerned about the environment and the resilience of our savings and investments in a changing climate. So do get in touch if you want to learn more about that or find the relevant net zero initiative. And I think I've finished a bit early, but I'll leave it there, and thank you so much, and I'll pass you back to Julia.
Thank you very much, Charlene. I think that was great. I love all the stuff that's happening around COP26, and indeed we are running a little bit early, and I very much doubt anyone's going to mind if I say, why don't we have a slightly longer coffee break? So I think that's probably what I'll do in just a moment. But just to say, I really appreciate all the work that you're doing, both with Good Money Week, getting it out there, and also, you know, linking us through to COP26. It couldn't be more important. I can see there's a really wide range of people who are listening in today, some of whom have got phenomenal reach into the investment world. I really hope they've taken on board what you're saying, Charlene, and I hope, you know, for those few that aren't UKSIF members, hopefully they'll consider, maybe they'll consider joining UKSIF as members. I hope so, because UKSIF is not for profit, been around a long time, and really banging the drum for this area for always, which is why I guess lived and breathed UKSIF for a very long time myself as well. With that, I will say thank you, Charlene, and I will I'm going to just introduce the next speaker now and go through to explaining that our next speaker is Richard Monks. And Charlene, I hope you can stay on for that, because I am regularly having people asking me what's happening on regulation on this side. There seem to be some false starts. There's some interesting stuff that, you know, with me, with my personal and my UKSIF hat on, we've been calling for change for a long while in this area. So I'm absolutely delighted that we have the Director of Strategy at the FCA, who's going to be joining us at 11 o'clock.